What is going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. Hope you all had an awesome Super Bowl weekend. It is February 8th, 2021. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today, we're going to be providing an update on the Pristine Capital trading service. We'll talk about the price action in the indices. We'll go under the hood and check out our sectors and style factors, including some things that I think are a little bit odd. We'll jump into the trades I took. I took a bunch of trades and recorded them all so we can go through all those. And then we will wrap up with some options order flow. But before we jump in, quick risk disclaimer. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but not least, do not YOLO your entire account into any one of my trades. All right, so let's jump right in. So did a bunch of work on this service over the weekend and had a bunch of people reach out, which is awesome. So I included on this first slide, a tentative launch date of March 1st. A lot of the infrastructure is set up. Pretty much have the Discord set up. I have my Zoom webinars, my Google Suite, all that stuff. Right now I'm working on the website and sort of like the e-commerce portion of things. And I do have a call with my developer coming up. So we are going to go through all of that stuff. For now, here's my contact info. If you are interested in joining the service as a charter member, feel free to give me a shout and reach out. All right, so let's jump right in here. I'm actually going to pull up what we have here. Our ES futures. And today we're going to be calling for a market crash. No, I'm kidding. Anything but. Yeah, right. Look at this. So we had our ES futures here. This is the S&P 500. We had a really nice run after the election. This has just been, absolutely glorious for several months. We did have a pretty sharp little like mini correction here due to the GameStop fiasco and a lot of the stress the hedge fund community was under. So we corrected for a good 4 or 5 days. Then we had a very powerful bounce here. And we had 5 straight up days in the market last week, which rarely, if ever, happens. So last week we were pretty much blessed with an awesome market. And that continued today. You can see the S&P 500 closed up 0.78%. We had the NASDAQ QQQ up 0.67%. Our big winner for the day was the IWM small caps up 2.55%, and we had the Dow Jones up 0.75%. So there's really nothing bearish about what's going on here. We're above all the key moving averages. We are above this monthly value area, and it's so funny because coming into this month, we were below it, and I was like, oh, let's see, how we do here. We just blew right past it. Now I would say we are getting a little bit extended, just in the very short term, where you can see here, even from the 5-day exponential moving average, at this point we're kind of extended off of it. Same thing with the monthly value area, but we do have our target level up here at around 39.61.5. So I am going to be looking for that level as my next upside target. But you'll see I did lighten up on some positions today, really just for prudence. This was day 6 of a really nice uptrend. And really what I want to do is just make sure, if we do get some sort of dip or sideways movement or whatever, I just wanted to make sure today that I put some of the money in my pocket. That way, if the market keeps going up, that's really what I want. That'll be great. If the market dips, I won't be so concerned or, in a stressed out posture or anything like that. But everything is looking very bullish today. And let's take a look at our Qs. The other thing, we have options expiration in about 2 weeks. So it is not this Friday coming up, but it is the next Friday. So let's see. And then at that point, typically the game board does reset a little bit. So that's why in my prior videos, when we were coming off the bottom, I was like, this seems like a pretty unique opportunity here to get bullish. Just because of where we were in that options expiration cycle. So let's take a look. Yeah, the Qs also look very bullish. Put in more of a doji candle, as you can see, or I guess I would call this maybe a hammer. But yeah, we closed near the highs, which is awesome. And this one too, just getting a little bit extended, but very bullish. And then let's take a look at these small caps. Wow, really nice move for the small caps here. So the small caps hit R1 pivot level about 227.24. So that's like, initial upside target. Yeah, so here, I definitely just wanted to be a net seller, for some of these dynamics, just how, in a very short time period, we're getting a little bit extended. But, that is by no means me getting bearish or anything like that, or trying to discourage anyone. So we have that. Then we have the Dow Jones. Yeah, and today was one of those days, like, I posted this on Twitter. I believe it was, not this past weekend, but the weekend prior. The best time to get long is typically when you see no one on FinTwit posting bullish setups. That is like the perfect time to get long, when everyone's pretty much in fetal position and, really negative on the market. Today, I would say that I saw the exact opposite. There's certain days like today where you get so many people coming out of the woodwork saying like, oh, everyone who shorts this market is an idiot. You can't short the market. Like things like that. Once those statements start getting thrown around, that's typically when I like to, start selling. Like for instance, like GoodRx is something I've had in my portfolio for maybe like a month or two when it wasn't really like a hot stock. And today I saw people, like posting about GoodRx, and of course it reversed like shortly after. So yeah, there's definitely like some contra indicators. They're not like end all be alls, but yeah, typically when I start seeing that kind of behavior, I know like, okay, this is the 6th up day in a row, and now people are saying don't short the market. Like, I don't know, it's just kind of interesting. But yeah, the Dow Jones broke out above the monthly value area. Yeah, you can see even the Dow Jones had a really nice move today. Yes, let's take a look. We're going to check out our sectors and style factors just to see what was going on under the hood. Oh, and before I do that, let's take a look. I remember I wanted to go through the VIX. So this is actually a reason why I was like, I'll just take a couple positions off, because in my opinion, the quote-unquote easy money has been made. And what I mean by that is typically when you get these big spikes in the VIX, we've been through this a bunch of times, but I like just hitting on this. So you have a big spike in the VIX. Then typically what happens is you get like long wicks on a couple of these candles, and the VIX really just can't sustain the highs. And then you get a really nice rally as the VIX compresses. It happens almost every time. So like I love to get really long into that VIX compression. You can see we had that same exact dynamic over here where we closed on the highs. Then we had, big upper wick, another big upper wick, another big upper wick. And you can see, we've had a really nice compression here. Take a look, luckily the VIX closed on the lows, which is very bullish, but we're back at the low end of our recent range. So that's not to say the VIX can't, break down to 18, which would fill the pre-coronavirus gap. It's not saying that at all. That could certainly happen, and I'm very open to that. But in terms of the like quote-unquote easy money, in my opinion, the easy money is when you're riding the VIX lower. Now we'll have to see what the VIX does. Like today, you can see the VIX closed plus 1.77%. So whenever I see that correlation where like the market is up and the VIX is up as well, that sends off sort of like a yellow flag in my mind of like, okay, I'm still going to be long, but this isn't where like I want to be. Like, say if I was like bearish, to just start like initiating longs here, that sort of thing. VVIX, also closed on its lows today. Yeah, you can see, pretty much at the lower end of the recent range. So we'll have to see. But yeah, the risk reward just isn't quite as compelling as it was for me last week when I was pretty much like, oh my gosh, this is an amazing opportunity. So we'll have to see. We have that. So we went through the VIX. We'll really quickly check out our sectors and style factors. And you can see here our top performing style factor or sector. We have the YOLO ETF, the cannabis names, up 4.91% today. Kwebb, which I still have my 90, 95, 100 strike call butterfly. I took a target in that today, which you'll see shortly. But yeah, it just took a little bit of a break, down 0.21%. Another big winner, we had the traditional energy stocks up 4.18%. We had biotech with a really nice day. So yeah, a lot of these sectors are performing really well. And I would say, like, in terms of like sectors thematics, the big news today was Elon Musk. Tesla investing $1.5 billion in Bitcoin. That was huge, and that really got that space going today. And I did put a trade on within that space. Let's see, we have our style factors. The best performing style factor today was cyclicals and high beta, which is very bullish, and that shows that investors are rotating away from, the safe style factors like defensives, high div, low vol, and they're moving to a more risk on posture here. So that's also very positive. These are my trades for today. Or let's see. No, hang on. These were from, February 5th. Let me grab the trades from today. Let's see. Okay, here we go. Yeah, I did a lot of trading today. There we go. All right, so we'll go through this one. Yeah, so you can see I did a lot of trading. I got long some Nanox common shares. I got long at 723 in the pre-market. And there was pretty much, a piece of news that came out over the weekend where Nanox, they do this medical imaging as a service product. Right now, Nanox is pretty much like a pre-revenue company. And they just signed an agreement, where they would have some revenue coming in. So I pretty much added that stock in anticipation of, potentially a big move in this name today. You can see Nanox didn't really do all that much. Let's see. We'll pull up Nanox. Yeah, so you can see Nanox, really just put in a bit of a doji candle. But yeah, I'm still holding on to my common shares. We'll see if we can get this breakout. And I do think Nanox is going to be a nice name to hold in 2021. One of the big issues with this company is everyone knows it has a ton of potential, but there's a lot of people that are like, is this company actually real? Or are they going to start actually making revenue? So there's a lot of hesitation in that respect. So every time I see like a news article, a new partnership that shows, Nanox is a real company, they are going to start generating revenue. That gets me more bullish on the stock and more likely to get involved with the stock. So I added a position there today. So we had Nanox. TWST. This one, TWST. I sold the 170. Let's pull this up bigger. I love this trade. I sold the 170, my 165 February 19th put spread for $2.75. I have no idea how I was able to receive, a 275 credit on a $5 wide spread for this one. But my spread here, you can see TWST, there was a pretty adverse reaction to the earnings report the other day. But yeah, my spread, I saw that, okay, we hit that 50-day moving average and we had this big gap. We sort of fell out of bed. But when I look at this thing, it's still in a nice trend where you can see we tagged the 50-day prior, and this in the grand scheme is a higher low. And, now we had another nice, really bullish day. Shout out to Pounding the Table, Anthony O'Hyan and Avi Mash for pointing this one out. I listened to their podcast this morning, and that's how I got the idea for this one. And this one, so put on that put spread. So essentially what I'm playing for is, okay, I'm saying that TWST, I'll make my max profit if by February 19th, TWST is trading over $170 a share. That's where I'll make my money. I'll lose this trade if TWST is trading under 165 by February 19th. So we'll see. This one is looking pretty good. I also added, just some common shares in this one, just in my IRA. So we'll see what happens with Twist, but really liking this one. I think I got, pretty decent trade location on that one. Let's see. PVH. I actually closed out my butterfly. I had the 85 by 95 by 105 call butterfly on. And with that call butterfly, what it means is I will make my max profit if PVH is at 95 bucks by the expiration date, which is February 19th. I put this on when PVH was trading around 85 bucks. So I made some money off this nice bullish move that PVH put in. Shout out to one of my buddies for, I don't want to mention his name. Not sure if he would like me to do that, but he's the one that brought PVH to my attention way back when I've traded this one, a couple times. But so I put this butterfly on for $2.70 a couple of days ago. Talked about it in the market recap video. I closed down my butterfly for $4.58. And you can see the reason why I wanted to close out is because PVH is actually looking pretty bullish here. And what I don't want to happen is, I have that butterfly on. I'm targeting the 95 strike, and then PVH just blows right up to 105, and then suddenly I'm out of my profit zone. So I figure, that's almost a 100% return. I'll take that off the table, and I want to lighten things up anyway. So, just took that one off the table. Let's see. Then we have partial exit. I sold my Celsius February 19th 60 by 65 call spread for $3.09, and I had paid $1.70 for those. That's another, I believe that's like a 70 or 80% return. I took about 40% of the position off, just because Celsius had a nice move. I have the profits in hand, and I just wanted to make sure that I'm paying myself a little bit along the way. That way, like I said, hopefully, oh wow, and Celsius closed way off the highs. Yeah, so this is what I mean. That's why I took a target, or took a target when this thing looked pretty exuberant today. It was looking awesome. Then it looks like some sellers came in and auctioned this thing lower. So what I like is say if Celsius opens maybe even a little bit weak tomorrow, I could always add back what I took off. So definitely today I just want to take some targets and things. But yeah, we'll see. This one I make my max profit if Celsius is above 65 bucks by expiration. And let's see. Yeah, so I had that one. GoodRx is one that I've been hodling for so long. So I took a target in GoodRx as well. I sold my April 40 strike calls for 19 bucks. I paid about 7 for those. So this one is, almost a triple, where I've really been patient with GoodRx. I said still holding my 45 strikes, but wanted to take a target for prudence. So yeah, GoodRx. We might not even have time to go through all these trades. I'll start, going through them a little bit quicker. But yeah, GoodRx. I started accumulating some calls. I played it off this low right here, this base. I took a target and closed out my position up here. Then I added back, in this base over here. And today we just had a nice move off the open. And I did, I had a good trade location for these, luckily, where coming into today's session, my game plan was, let me take some targets, let me take some chips off the table. So I took it off, very close to the highs of the day. And then GoodRx actually reversed. So this is one where I took off half my position for almost a triple. So we'll see if it pulls back. Maybe I'll add back to my position. I still really like this name. I still have, half my position on. And then, okay. Yes, there's so many here. I was so long last week. I was just so deep in the market. Exit. So I closed out. I had some EMPH March 19th, 185 strike calls. I wanted to see if we would get a run into their print. I sold them for $28.25, and I paid $25.10. So not really like a crazy gain, maybe about like 10% on that one. Yeah, and let me see what they did. I want to see how they closed, because they do report tomorrow. And I was of the mindset, like, I'm not going to hold this one into the print or anything like that. I do like this company, though. But yeah, you can see they made a nice move, and then it came in. So I closed this one after it came in. I was like, sometimes companies like blow off into the report. So I was thinking maybe that's what EMPH would do. But yeah, this one not so much. So I closed this one out for maybe like a 10% gain just to get it off my books. Let's see. I have a huge position in skills. I've been talking about that last week. And I mentioned it's about like 18% of my portfolio, really big position. And what I noticed was like the implied vol in that stock, is very elevated. So I sold, for part of my position, I sold some calls against my common stock. So I sold the 50 strike calls. Oh shoot, and I didn't even include, I got to get better at these, but I sold those for like $2.15. So I figured like, this is a sweet deal where, if skills happens to rally up to $50 by February 19th, I'll still participate. But in case it takes a breather, which honestly I think it should, I sold some premium against it, so it's not really a big deal. And skills, yeah, you can see this looks awesome. So took a little bit of a break today, down 2.1%. But this still looks really bullish. So really, if this happens to go sideways for the next couple weeks, I sold some premium in it, so hopefully I can collect a little bit of income. If it rallies up to 50, then my part of my common stock position will be called away. And I figure that's perfect, because if it goes up to 50, I'd probably want to take a target anyway. So we had skills, pgny. I got long a call calendar spread. Oh my gosh, I took so many. Damn, this video is going to be really long. Sorry about that. So pgny, I was kind of in the zone trading today. So I got long a call calendar spread. And with the call calendar, and what I noticed is pgny, if you look at this pattern, it's trickling up. I love this company. I'm very bullish on it. It's trickling up, you can see, but it's a very slow mover. And like I said, the risk reward here, I don't think it's like too crazy in terms of the overall market. So I don't really want to be getting like aggressively long, just like naked call options. So I got long the 55 strike for March, but I sold the 55 strike for February. So what's going to happen is like if pgny just decides to like trend sideways, I'll still do well on my butterfly because that February call is decaying very quickly. The ideal scenario for my calendar, not butterfly. The ideal scenario for my calendar is pgny just kind of trickles its way up over the next 2 weeks and ends up getting pretty close to that 55 level. That would be perfect. So we'll see what happens with it. What I wouldn't like to see happen is like pgny just blow through 55 tomorrow. If that happens, I can actually lose money on the calendar. So we'll have to see what happens. And then yeah, so this was, I took my second exit in my kwebb butterfly. So I had the 90 by 95 by 100 butterfly. I paid 93 cents for it. I got it really close to the lows during that GameStop financial crisis. I paid 93 cents for it, and I sold another part of my position for $1.86. So 100% gain. I put here I still have 60% of the position left. And the reason why is we're hanging around right by my target here. So what I like to do just for prudence with these butterflies, another really good friend of mine, his name is Scott. One thing he told me is just, don't try to be the hero. And that really stuck with me, where kwebb, I can make a really nice profit on this trade So like I paid 93 cents for it. If kwebb closes at 95 bucks on February 19th, I can make, a quadruple on my money, or, whatever, really a quadruple on my money. But the odds of that happening, given that it's trading there right now, 2 weeks ahead of time, I would say it's probably pretty slim. So I wanted to, just for prudence, take another target. So I'm down to about like 60% of my position. Close that out for about a 100% gain. And let's see. All right, here we go. Then this was the really interesting trade. So mstr, I got long the 970 by 1000 February 19th call spread at 135 for $13.20. That's you're risking $13.20 to make $16.80. And mstr just continued to moon. So look, when I got into this, mstr was trading around like 960. And it just mooned to 1040. The problem was that these options are very illiquid. The spreads are very wide. I wanted to take a target in my position. And the weird thing was, like, you would think, this spread's going to increase in value as we go further up. But I believe just because of how illiquid it is, that wasn't really the case. It was really weird. So I ended up closing out this position for $14.20. So really just like a scalp winner. So yeah, pretty nice trade. We'll see, but nothing too crazy. Yeah, so Jumia, I had some May 21st 50 strike calls. I paid $20.65 for those, or $20.10. I exited for $20.65, so made a small profit. For me, I would call that a scratch. And I just said Jumia is a name I would rather trade in common shares. For me, I want to take some of the leverage out of my portfolio, just given, we've had a really nice run. So I figure, Jumia, I'll take an exit on that one. It's not really doing all that much for me anyway. So I took that exit. TTD, I took a target. I had a February 12th, 635 by 650 call spread. I paid $6 for it. I took a target and closed some out for $8.25. That's about like a 25-ish% winner. And then here I posted my exit for mstr. So I closed out for $14.25. I paid $13.20. So just like a little scalp winner. So yeah, a lot of trading today. Overall, I was a net seller. But you can see, I did some day trading. I did, some positions out of that pgny. So yeah, nice trading day. So we will see. Yeah, and for everybody that, signs up for my trading service, all this, you're going to have access to it in real time. So yeah. So we have that. Let's really quick, we'll take a look at the options order flow and just get, a quick vibe for what happened today. Yeah, and there's going to be a bunch of cool stuff that I'm offering. Like I'm going to be doing Zoom webinars, pre-market session. I also have a longer term portfolio that people are going to get access to. Yeah, so there's going to be a bunch of cool stuff offered. So yeah, feel free to shoot me an email. I'm going to have my email in the description of this video. I showed my email earlier. So yeah. Bear with me, I'm just logging into Cheddarflow. Yeah, what I really want my community to be is just like realistic. Like I don't want to like play games with people or like, I'm going to post 10 charts and just say they're all bullish, and then if 2 of them do go bullish, I'll cherry pick those and declare them winners. Like you're going to see what I'm trading in real time. You're going to see my win rate and my loss rate. So yeah, I'll be posting the winners and the losers. You're going to get everything. So it's just like a more realistic look at what a pro trader actually does. So let's see. Okay, so we have our options order flow here. I see some puts came in, towards the end of the day, which that's been happening for the past couple days. Like we have some SPY puts coming in. let's see, we have NVIDIA. NVIDIA is a very interesting name today. Let's pull that one up. I know a couple of my friends ended up taking NVIDIA for a swing. For me, it wasn't really in the cards. I was trying to be more of a net seller, but this one, yeah, it looks fantastic. So yeah, up 6.24%. We're testing the upper end of that recent range. So we'll have to see. Maybe this is it where NVIDIA, it's been basing sideways for a good, 6 months. Maybe this is where it makes its move. So I'll probably have this one at the top of my watch list for tomorrow. Let's see. And then we have, pretty much all the payment processors like PayPal, Square had really nice days because they do accept, cryptocurrency. And Bitcoin had an awesome day too. So a lot of big movers today. Let's take a look. I see there's a NEO order. I want to see what NEO did. So I saw something out of the PBOC today, and it was pretty much saying like, Tesla needs to play by our rules in China, essentially. So I was like, maybe NEO, they're the Chinese EV player. Maybe they will get a bid today. NEO looks like it's basing sideways, and it does tend to do that. NEO will have a really nice run, then base sideways for a while before it takes its next leg up. So I'll be watching NEO pretty closely tomorrow as well. Let's take a look. We'll pull up one more. And then I see some orders for AMD. Let's see what AMD did. AMD has been a heartbreaker stock for bulls for quite some time now. Yeah, and AMD looks pretty sloppy here. So you can see it's been putting in this sideways move for quite some time. So we'll have to see what AMD does. I might actually play AMD with a butterfly for this options expiration. Yeah, that looks like it might be good for me. So we'll see. But that about does it for this market recap video. Hope you all had a great trading day, and I will see you all tomorrow.